What's up everyone, this is Marcus at TradeSmith and I'm going to show you a new program that I joined called Warrior Trading Pro, and that is a program that I am in, been doing for 6 weeks, and I'm going to show you exactly what I plan to do with this small account challenge. So alright, actually it's a good day all things considering. I am down $40 today. I did do some trades on Myos and Marathon. They both had Marathon had a catalyst from I think yesterday, and then Myos did have catalyst. I did feel good about today's trading. The key is when you have a bad day is to get back on the horse and really just focus on your setups and your trade plan. Your trade plan will always be that baseline discipline that you can use. However, it protects you from making big losses. So the key is I take 4 trades a day on a small account challenge. And the goal of this challenge is to work a small account to the point where you can basically work it up to $15,000, $20,000. So I did start off with a small account, and currently yesterday I did take a major hit. I was trying to get it to that $2,500 mark, but took a hit, $1,400 yesterday. So I'm a little under $1,000. So it really is imperative that I stick to the trade plan and work my way back up. Again, the goal is just to focus on becoming a disciplined day trader. So when I did my trades today, I focused on taking only those 4 trades at a standard size. I know that I could have started smaller today, but because it is a small account, if I do make anything on it, I wanted to make sure that it's covering the brokerage fees. So overall, today is another day that you're seeing on my scanner. I had all of the pre-market gappers, Myos and some of the others, but you notice that all of them are doing this fade in action. So I haven't seen any momentum right out the gate when the bell rings. So it really was a concern. Again, going back to sticking to the plan. I did do a couple of pre-market trades. One thing that you'll notice about Myos is that there's a lot of false breakouts. So you'll see it false breakout here, false breakout here. Then you can see that it was looking like it was going to break that pre-market high again, but it actually broke it, but then it came back. So it was another one. And then even at the first of the bell, I definitely didn't touch this, but it looked like it was going to shoot up. Then it started fading. And of course, I wanted to wait on a 5-minute setup. So what I did is I did focus on those trades today on good entry points and just seeing where I can get what I can on these trades. So let's look at the trades. I did not get the entry point on the first pre-market trade, but this is the second trade. I think I lost the video footage there, but I am seeing that I got in at 257, focused on this again, making sure that that the 5-minute setup. So I'm looking for a 5-minute candle to make a new high. One of the biggest factors of this trade is, again, looking at level 2, seeing that they're a big support at 250. So on this trade, I literally just set it and almost didn't forget it, but set it and kind of eased up on it because I know that I tried to get in at 250, but I got a bad fill at 257, but I was very comfortable with having these large buyers stacked up at the $2.50 range. And of course there was some time to wait for it to consolidate, but definitely felt good about that trade. What I liked about this action, the price action in level 2, was that you can constantly see the buyers. Even though you may see some of the sellers stack up, you can still see the buyers. They were definitely there to support. So that definitely gave me good confidence in the trade. And again, you can see again that I'm looking at certain levels. This is strictly looking at level 2. I'm looking at around the the $2.70 range. There is a big seller there, so I'm just looking at that range to make sure that we are good to go. So I want to see it test that range. When you're looking at level 2, you want to look at, again, just the price action and this share size that is happening here. And then I'm looking at the time and sales. Now I did not remove the time and sales, the time on it yet. I normally just keep it there only when a stock is going to halts, but I do agree if you're not playing that strategy of stocks going into halts, you should just go ahead and remove that and only look at the price and the last size of it. But you can see that green that is there, which keeps that confidence in staying in the trade, as well as I'm looking at the share size of these and see anything that's notable. And also keep in mind the total amount of volume. So that volume is actually at, it's been over 100,000 in just this one candle, but you can see that it's over 17 million, which is great. And this is where it actually breaks that 66 and it's starting to challenge it. Comes back a little bit, but you can see that at the 66 mark, you do not see that big seller anymore. Those shares have definitely been bought up. And then you see at 270 has always been the next level that I've been watching. Again, the goal is looking to see when it's going to test 270 to 275. So again, I just stayed into the trade. I noticed that these are some good buyer support at 61, which would definitely protect me. But it did go through its consolidation and I did wait on it. So that was a part of that trade. At one point, it did come back down to the 250 range, the $2.50 range, but I stayed in the trade because you can see these big buyers of support that is here. So I'm pretty confident at this moment that, you know, with the sellers trying to short it when it gets this low, that it would be too hard to overcome that big size there. And I kept an eye on it. Now, if that big size would have left, I would have just got out of the trade with a very small profit. But that was the goal, was just to stay in the trade until it resolves. Even at one point, you see that it actually touched that that share size that is here. So you see that that was a test of that 53 mark. And of course, I'm technically going down on this trade, but again, I see such heavy support that is here at the 250 as well as the 253. I stayed into the trade. Also, you know, I got into the trade on this candle here. It actually did make a 5-minute candle make a new high, but it just did not resolve in a typical momentum stock. So that was my first, you know, earmark to let's back off of miles, because we're seeing a lot of false breakouts on this trade. So I mean on this stock. So definitely held off after this one. With that critical reversal and seeing the flash of green, that is where you can tell that those that is trying to short it are getting a little frustrated with it. So you can tell that that was the point where it wanted to make its move up, and from there I just held on to it to see what it does when it tests this 275, where you have about 240, about 24,000 shareholder, 21. So you see that you have that person is there, and you can see it decreasing a little bit. But again, it did the, you know, almost the false breakout look. So I didn't want to hold on to it too much, but I wanted to see it break as the number is decreasing. That's why I stayed in the trade. I'm seeing that it's constantly decreasing, so I'm holding on to it and let it fully resolve. And also I'm looking at the point that green is still coming over here. So it finally broke, but again, another false breakout. I actually had a problem with because it was such a long trade. I was looking away. I should have exit out right there, but when I hit the button, I noticed that on my hotkeys, which I'll do a technology review on that, I had to actually make sure you have the quote area selected before you hit the hotkey. So I was able to hit my hotkey, but again, that was that trade that got me out of the red. So I began to look at Marathon as it began to take a pullback, thinking that, okay, it just broke the high of day, and I'm looking for, and you can see I'm contemplating waiting on the first 5-minute candle to make a new high. So I saw that my 5-minute was at 65, so I set that, and I'm looking at the pre-market high of 76. So I'm looking at something anywhere between 450 and 76. So I knew I wanted to get into the trade around the $0.50 mark, but I noticed that I did not, get in right where I desired it. And I need to also keep in mind that there's been a lot of false breakouts. So if something didn't resolve quick, I want to have that discipline to let it go and not try to hold on to the trade. Looking at that 450 mark, that is the point that I wanted to click to get in, but I noticed that it was at 454, which I wish I could have got in at 50, which would have been great, but that was the trade that I was given. So I'm waiting to see if it's gonna pop back up, but I did see a flash of red, and I saw some green come in. I am looking at the tape, thinking that it is gonna creep up, but it's so hard to get above the 54 mark. That was a big concern, and it's a little bit, not really breaking out like it should. So that was a concern. And from there, I started seeing that it was dwindling a little bit and wavering. So if it didn't hold 50, I needed to get out as soon as possible. And again, that's where you see on the reverse end, if you're in a trade on the buy side, on the long side, and you're seeing these share sizes go down real quick, that means that the sellers are definitely coming in, or the people who are shorting it are definitely coming in, and they're, buying it on the downward. They're shorting it on the downward side. So that's not a problem. It was great because I did get out as soon as I saw those levels break. The key is I have to make sure that I am, being patient and waiting on the 5-minute. But that was a good trade. All right, and here's where I got set up with my last trade of the day. I am looking at Marathon to make one more trade, and I'm looking at the 5-minute candle to make a new high. Now, one thing I have a question is when you're doing a 5-minute candle to make a new high is you may see the top and tail, which is something that I totally didn't miss. So you do want to consider that top and tail as a signal. And also, of course, when you get in on the bull flag, I'm looking at the levels of the green versus the red volume, but I'm looking for it to resolve. But you can see that I got into the trade at 436, and you can see that I'm looking for the 5-minute, but I noticed that I didn't look at the top and tail, and I'm noticing that it is in a bear flag here. So that was my concern. So at this point, I know that I was a little too jumpy on the trade, got in, wanted to see if it reversed, but definitely wanted to cut my loss before it begins to drop down to the VWAP. And also I was just looking at the VWAP that is here, and I was thinking almost of a 5 pull back to the VWAP and a bounce off of that. But again, I was just too premature on this one, but I was happy that I was, keeping up with controlling the loss. At this point, I'm just looking at what is the point that I want to cut the trade, and I'm looking to see before it resolve into a bear flag. I, just want to make sure that I'm ready, whether it goes to mostly the downside. So I'm looking at this level here. And once it breaks that, I decided to go ahead and cut my loss, which is the importance of having hotkeys, of course, so that you can get out as soon as possible. Because even with that, you may have to sell on the bid, and it may need to be at a lower price. So that is something that I was a little, disappointed at. But you can see I hit that hotkey fairly quickly, took the loss, took the hit on the chin like a champ, and I closed the day with $40 loss, which is not bad. I'm glad that I stuck to the trade plan. All right, so that concludes the day. Again, I'm happy that I at least stuck with the trade plan. Again, I saw that the market, the major gappers, they are slumping, and a lot of people are waiting on the news about the stimulus package. So I think at that point, we'll probably see some uptick toward the end of the week, as well as, that there's the jobless claims that is on, I think, either today or Wednesday. So there are some things that are coming up. I am focused on closing this out, do some simulated trades, as well as work on my swing trades. One good tip, if you ever hit a certain low, whether you have a big hit or if you're a new day trader, it's good to use a real account, but use a very small share size. I think one of the gentlemen that had responded to one of my videos mentioned that. I thought that was a great idea. That is something that I'm doing, using the Warrior Trading Pro simulator that they do give us. I am doing a lot of the trades. Even yesterday, it's like the key is I'm always up on that. And you want to be careful with a simulator. You want to still trade as though it's a small account, especially if you know you're going to go into that strategy of a small account. And what I mean by small account, under 25,000. But if you are trading and you're working toward building up that emotional discipline, you should use a real account. And once you have a real account, just start off really small, even though you're making $15, $20, but most of that will go to brokerage fees. The key is to get that emotional bond with the trade, because you can learn all the technology, which is what you should be doing with the simulator, getting familiar with the platform, the broker, the hotkeys, as well as just the layout, making sure that you have things laid out that is good for you, and learning the scanners and going from the pre-day market scanners to the Momo scanner to looking at your halt scanner to understanding level 2. It's a lot that you want to deal with. You don't want to do all that in a live account. And you want to keep things very consistent. So you want to start with a small share size and work your way up. I was able to do that, but I think I'm at that certain bell curve of when I was about to say a developer because I work with developers, but when a trader began to learn how to size up, and that's what I'm at. I'm at that point where I went from the 200 shared trades, I went to the 300. Started at a standard of a 500, which I feel that is comfortable, because when I do win, I am getting clear base hits, which you've been seeing in the previous trades. And then I'm working on at what point do you start with like that 1,000 share size and work your way up. I feel like I'm not ready for that yet, because there is a deep emotional tie, which you saw that I did yesterday, where I end up doubling down because I formed that habit. And that's one thing you want to make sure you're doing, is just looking at how your emotional state is as you're sizing up. But I hope you enjoyed the trade session today. Even though, again, I'm down $40, I'm completely happy. I think this is a really good bounce back to get back into the small account challenge. I will be available online tomorrow. And I will take it easy. I don't have to trade every day. That's another thing that I learned, is not to force a trade. So I hope you enjoyed that session for today. I am hoping that you all give me some advice as a day trader yourself on what share size position that you feel that is your max, and for a small account challenge, what would be some of the things that you will focus on as far as the patterns, the setups that you will focus on to become a more profitable trader. This is a new channel. For more tips and tricks on trading technology, hit the like button and go to TradeSmith.io.